Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I'm going to talk about the Boeing Company, ticker symbol BA, okay? So you asked me about that in the comments to do a valuation on this stock and I'm gonna do it, okay? So leave me a like if you find this video interesting and subscribe to the channel and let's begin. Alright guys, so before we start, I would like to tell you one thing, okay? I want to clarify one thing. Those kind of fundamental valuations are telling us if a company today is worth it or not in terms of overvaluation and undervaluation, okay? So the idea is we want to buy a stock and we want to see if the price that we get today in the market is fair price or not, okay? So if I'm paying too much or not, if I'm getting a bargain or not, okay? So this is the meaning of this analysis. Because I did a fundamental valuation on Tesla, if you haven't, go to check it out. And basically I say that Tesla is overvalued right now. Now, I want to clarify one thing. It doesn't mean that Tesla is not a great company, okay? But in general, when we do this analysis, it doesn't mean that the company we're analyzing is not good for the future. What these analyses are telling us is, okay, now this is the company. If I want to buy the stock today, am I paying too much or am I paying a fair price or am I getting a bargain, so an undervaluation? This is what this analysis is telling us, okay? So I hope now is more clear for everyone, okay? Great, now let's begin. So Boeing, everyone knows this company which has been hit, okay? This looks like an airline company, but in reality is not a straight airline company, okay? Because there is more of an aerospace industry, okay? They're in defense industry, okay? So their main business is they have commercial airplanes, okay? So it's a percentage of their business. And they work a lot of the defense, space, and security. So they work a lot with the US government, okay, about that. This is why this company is like important for the US government, okay, even in terms of keeping them away from bankruptcy. The US government has a high interest in the Boeing company, okay, because of that. And they have Boeing Global Services and a Boeing Capital Corporation, which is basically where they help buyers, okay, to finance their purchases. So now, before we start with the valuation, let's take a look at the balance sheets, okay, so to see the situation of the company nowadays. Now, this is from the first quarter of 2020, okay, and we have total current assets and total current liabilities with a current ratio of 1.17, okay, which is above 1 and it's not too bad, okay, for a company like Boeing. Total assets and total liabilities, here it comes a little bit of problem. Why? Because Boeing actually they have more liabilities in total than assets, okay, and that gives us a negative shareholders equity, okay? Total assets divided by total liabilities below 1, okay? 0.94. The total debt of Boeing is 38.9 billion and the net debt for Boeing is 23.88 billion, okay? The market cap right now is $115.92 billion and the book to value now, it doesn't make sense, okay, so don't look at it because as I told you, the equity is negative, okay? But anyway, so perfect. Right now, let's take a look at financials, okay? So revenues and earnings. We can see that Boeing overall during the last 4 years, it was quite constant, okay, in revenues. This is not a company where you can expect a huge growth, okay? This is something that is really constant. Now, the problem is in 2019 they had a hit, okay, a bad year for Boeing because of the grounding of the Boeing 737 MAX, okay? Anyway, 2019 was not great, and 2020 is not gonna be great either, okay? But overall, what we can expect from a company like Boeing is to maintain a certain level, okay? With a very slow rate of growth, okay? So right now, what we can expect for the future is after 2020 to trying to be back at previous levels, okay? So that's it. It's not something new. It's not something like with a huge growth like can be, for example, Alibaba, okay? This is a more stable company, just to understand what we are talking about here. Now, let's check the valuation, okay? So, we have the last 5 years from Boeing, and we are going to use free cash flows to equity. So, as always, we take the cash flow from operating activities and we deduct capital expenditures, and we get the historical free cash flows to equity. Now, 2019, I'm not going to consider it because it doesn't make sense for our analysis, because from those historical data, we want to get ratios, okay, so that we can predict futures free cash flows, and this here is not useful. Okay, so this has been the net income, and this has been the free cash flow to equity divided by net income ratio, okay, over from 2015 to 2018, okay. Now, if we do an average, we get 141%. What does it mean? It means that 141% of net income becomes free cash flows to equity, okay? An average. Now, let's take a look at total revenues. Now, we can see here clearly that Boeing is not something that grows in an incredible rate. It's something that remains almost the same, okay? And we can see from here, actually, a negative growth here, another negative growth here, and a positive of 8% here, but overall it's like a constant, okay? And a negative, very negative year in 2019. Now, we have to check the net income margins, okay, by doing net income divided by revenues. And we get this. We do an average of those four and we get 7.42%, okay? So we have the two ratios that we need to forecast, okay? Great. Now, let's see. Now, analysts are saying that 2020 is gonna be bad, okay? Even worse than 2019 for Boeing. And this is pretty clear, okay? It's obvious. The estimated revenues for 2020 are 68.56 billion. And for 2021, 88.84 billion, okay? So a bounce back, a recovery, okay? A trying to be back to previous levels, around to 96 or 100 billion in revenues every year, okay? Great. Now, here comes our scenario analysis, because 2022, 23, and 24 are not predicted by analysts, okay? So we have to put a rate of growth, okay? And we are gonna do different analysis from a 5%, 6%, and 7%. Not more, because I am not expecting Boeing to grow more than those things. As I told you before, it's not something new, it's not something crazy, it's a company that exists for a lot of time and we cannot expect a huge growth. So let's check, okay? The first scenario, 5%. And what we have here are those kind of cash flows here. So we are predicting a huge hit in 2020, okay? Not a good year. And everyone agrees on that, okay? And a slight coming back starting from 2021, okay? And with a 5% interest yield, we are gonna be in 2024 with around the same revenues as they were making in 2018. Okay, so this is the first scenario. Those are the cash flows, and we copy them and we paste them here, and what we get. Now, requirements. The rate of return on Boeing equity. This is not the WACC, okay? This is the equity. I'm considering a 10%, okay? Because it's a quite, let's say, risky stock. It's a risky equity, okay? Remember that the equity is negative, okay? So 10%. And perpetual growth, 2.50, okay? I'm not expecting a huge growth from Boeing. Great. Now, this scenario, it gives us a today's company value of 114.96 billion, and divided by the total amount of shares outstanding, the fair price for Boeing today is $203.73 per share. Okay, great. Now another scenario, I'm gonna increase the perpetual growth to 3%, okay, and not more. 3%, everything is the same, always. 5% scenario. The today fair price is $216.74 per share, okay? Great. Now let's change 6% scenario, okay? So when we do a 6% scenario, we can see the cash flows in 22, 23, and 24 are different, okay? Are growing now at a rate of 6%. That gives us a today's company value of 118.142 billion and a fair price of $209.33. Now, remember, the perpetual growth here was at 2.50%. I'm going to do the same and put it at 3%, and we get a fair price of $222.74 per share, okay? Perfect. Now, again, the last rate scenario, 7%, okay? Again, the perpetual growth at the beginning is 2.50, and the fair price with this scenario is $215.08 per share. And with a perpetual growth of 3%, we have today's company value of 129.14 billion and a fair price of $228.85 per share. Okay, perfect. Now another valuation, the free cash flow yield valuation. We take the estimated free cash flow for 2021, which are 9,295,000,000, and divided by the total amount of shares outstanding here, we get an estimated free cash flow per share of $16.47. Okay, now when we go back, we realize that in the last 5 years, the free cash flow yield average has been 6.40%. And we divide 16.47 divided by the rate, and we get a fair value in 2021 of $257.36 per share, okay? Now, we discount this back today, in 2020, and we get a fair price today at $223.07 per share, okay? Perfect. Now, as always, we take an average of all those estimates, and what we get an average fair price for Boeing as of today, July 2020, of $217.08 per share, okay? So, fair price. Now, as always, we take a range, okay, plus and minus 10%. I would say that the range for the fair price of Boeing today is this, okay? So it's somewhere between $195.37 and $238.78 per share, okay? So as of right now, as we can see, Boeing now in the pre-market is $222 per share. Okay, so is it overvalued? Is it undervalued? Well, I would say that right now Boeing is very near, is inside the fair price range. Okay, so what does it mean? It means that if you want to buy Boeing today, you are not getting a bargain. It's not undervalued, okay, but it's not even overvalued. It's the fair price, okay. If you are planning to buy Boeing for the future, today you are paying the right price that you should pay, okay, considering the fundamentals that I just showed you, okay. So with those free cash flows. Now, I hope you find this video interesting, and leave me a like and leave me a comment below. Tell me what do you think about Boeing, if you own Boeing and things like that, okay? See you in another video, guys. Have a wonderful day.